How do we solve the problem of making everybody in the world access finance while the underbanked of the world are many? How do we help them? Joining us today to discuss this theme are two very important guests from the 1inch Network, co-founder Sergej Kunz and Walid Benothman, who is the head of growth. Welcome, gentlemen. Pleasure to host you. Sergej, I've had the pleasure of speaking with you back in March. We gave a good overview of the 1inch Network. I encourage everyone to check that video out on my channel. I'll put the link down below to the first time we spoke. But now today we are joined by Walid. Walid, let's start with you. How do we solve the problem that I just introduced in the opening? I think it's more than 1 billion people in the world who don't have access to a bank, right? Will that change?
I think yes. So first of all, David, it's a pleasure to be here.
Thank you.
It's a pleasure to be here in the Future of Blockchain Summit in Dubai and being hosted by an amazing person like you. So yeah, there's about 1.7 billion people that do not have access to financial services. And we are here to help them and build financial instrument and technology that can address that. There's those unbanked don't have access to a financial system because they don't make enough for being economically viable for a bank to operate them under a bank account. So what we do at 1inch is we build product for those people and help them through technology to get access and be included to the financial system. The reason is because today you have like a centralized power that provide financial services. And that's why I love DeFi and decentralized finance, because you can establish peer-to-peer relation between user and networks like the 1inch network. So in our case, for example, we have a hot wallet that can offer exposure to this user to new financial instrument that can give them freedom and liberty.
Right. So, but if somebody doesn't have access to a bank because they don't have enough capital, how does 1inch solve that problem?
So they don't have access to a bank because, yes, they don't have enough capital. So let's say you are in East Asia, right? Yeah. And you are making $200 a month.
Right.
And the cost for a bank to have you as a client is $300, because every time you're gonna make a phone call to the call center for asking a question, it's gonna cost $30 to the bank. So it does not make sense for them to have those type of clients. That's why we have 1.7 billion people without a bank account. You look, for example, at a country like Egypt that is quite advanced in terms of technology. Only 10% of the Egyptians own a credit card or a debit card, right? So DeFi and decentralized finance instrument can solve those problems through technology by enabling peer-to-peer relation between user and financial network.
Sergej, I understand where the 1inch name comes from. We're all Bruce Lee fans. It comes from the 1inch punch.
Yes.
If somebody says to you, 1inch is just like a bank, how would you respond?
No, we are not.
Okay, why not?
So a bank is something what is a centralized entity with humans in between, I say, like intermediates. And you know how it is, people make mistakes, they became sometimes greedy. If you look on FTX drama, what happened, they just gamble with their user funds because people provide trust. A centralized entity like a bank is something what you have to trust, because you have in the traditional world, in the real world, no other options. Yeah, and here we come as like in the Web3 space, not just us, also other startups, co-building and expanding this Web3 new approach of ownership, where people own assets, yeah, and not giving it away and trust people. This is difference, and everything what we are doing, every technology which you see in decentralized finance, try to approach their, first of all, permission access, and also the ownership approach and decentralized approach. So there's no one whom you have to trust. There's only just a smart contract which you can read, which you can verify,
right?
And only transactions which can only be done by you, by your wallet, by your private keys, which you keep, and not someone else can block your funds, steal your funds, or gamble with your funds.
To echo with Sergej, I think a bank is custodial, so you have to trust, and in Web3 and DeFi, it's non-custodial. So you are always in control of your asset. You don't need to trust that central entity to guardian your funds. You are always the sole guardian of your fund. And you've heard that a lot, I think, in this space. Not your key, not your coin.
Yes.
That's why it's important to make this difference.
Right. And so, okay, for those of us in, let's say, developed countries, we're not talking about the underbanked anymore. I already have a bank account. Why should I then use my funds or transport my funds into a decentralized network? I'm okay with my bank account. That is the argument.
So you can diversify your portfolio. You have US dollars in your bank account,
yes.
right? You maybe have bought some ETFs, right? So, like fiat can be printed. Like US dollars were printed a lot in the last years in the US, right? So, so every dollar is much less worth than 3-4 years before. So, and if you look like back, I don't know, 20 years before, and like maybe real estate was much cheaper than now because we have huge inflation. And we have also risks. If you have more than 100K in Germany, where I'm from, on the bank account, it can be then if the bank goes bankrupt, that you lose your money because you have only insurance up to 100K for each person in each account. So, Web3 space, decentralized finance open you a way to diversify your assets, your investments. You can buy Bitcoin, you can buy Ethereum, you can buy maybe utility token of very well adapted and useful product in Web3 space, and it opens the possibility for everyone to become investors. So actually, like where I'm coming from Germany, not everyone is doing investments,
right,
because it's difficult. You need to set up an appointment with someone in a bank. You need to get access, yeah. So then you are potentially then you potentially can access ETFs, like maybe some stock, not every stock, and it's also like difficult for the people like to understand how that works and to get like access to it. And in Web3 space and device space, of course, there are also some difficulties in terms of user experience, but we still have the simple approach that everyone can get access to it easily.
So I think to elaborate on Sergej's point, a bank where you have your bank account, if you want to get access to certain asset class, you need to be an accredited investor. And the financial instrument on which you will be exposed will be limited to your profile. So for example, in the US, to be able to invest in certain asset class, you need to fill certain boxes, such as you need to have more than $1.5 million in wealth, and then you get access to this asset class that can generate the yield or profit. In the decentralized finance, we don't have that. Those asset class are for everyone, that with a smartphone and an internet connection. So,
for sure, we will get more regulation in Web3 and decentralized finance space, but just if you keep it simple and just think about investment into crypto, yeah. So it makes sense to diversify. It's not financial advice at all.
Yes.
It makes sense to invest in something like Bitcoin, which cannot be more than 21 million of Bitcoins, right? So US dollars can be printed until that specific point where US dollar became nothing worth. What I have seen, where I was born in the country, multiple times, people lost overnight all funds because they used fiat, which was printed a lot, yeah. And if you invest right now in crypto, you're sure that this is something what is not just local in your country,
right,
worth something, but it's worth something in the whole world. One Bitcoin is one Bitcoin in US, one Bitcoin is one Bitcoin in Vietnam, yeah, and in Dubai as well, yeah. And you can theoretically use this asset because there's a value behind this asset, this store of value. How I see Bitcoin, for example, you can use it to sell it to Fiat and buy here real estate, right?
Let's talk about crypto as a form of payment. We spoke about this offline. The future of money, stable coins. Everyone seems to be adopting stable coins now. Visa just launched its own stable coins. Let's talk about stable coins and the future of payments. Is this the future?
I think it's the present. We live in a world, a global world, where everything becomes globalized. We've seen that in the shipping industry, for example, now it's very easy to move like an object from another place to another place. When you communicate, internet came and everybody can communicate easily and exchange information in real time. But when it comes to money, it's still broken and segregated. Right. So I think stablecoin can play a role and it's the last piece to live in a real globalized world. And stablecoins that are pegged to real value can be gold, it can be...
Well, let's back up here. Why do you think big merchants like PayPal, Visa, are introducing stablecoins? They already have the US dollar, they already have every fiat currency in the world. What is the advantage of adding blockchain technology?
I think they just try to jump into the train, right. to the moon. They try to use this technology, and sometimes they very often also misuse the technology. They try to copy the Web 2 worlds, this like world what we see right now, and try to adapt in Web 3, but it cannot be like copied. We need to reinvent everything in our space. And of course, we see already USDT is already working. We need something what is bind to some asset like US dollar, right? So we can like work with these financial instruments. And I think it will be also in the future for traditional fiat currencies that it will be backed up by something like Bitcoin. Okay. Because like it's, for example, if you back up it like with gold, it's difficult to store gold. We have seen cases that gold was stolen and they thought they have gold. And it's difficult to transport. And cryptocurrency is easy to store, easy to securely store, and also easy to transport.
Okay, so the vision, I believe, the vision of OneInch, and you can elaborate on this as well, I think is to aggregate all the different trading platforms and find the lowest fees for trading for the user. How does that work?
So our global vision would be, if you're speaking about the future, that like maybe in 5-10 years, everyone is using our technology also for stock trades. Right now it's not working.
So you're not just doing cryptos. Well, right now you are, but
so right now we are doing crypto, but our technology can be used also for stock trading, security trading, well, whatever. Right. It's just the kind of base layer of technology which can be adopted. But right now it's not possible because every exchange, every bank, they have own standards, own APIs, and you cannot really perform one transaction among multiple stock exchanges right now, right? So as soon as they adopt blockchain and use, for example, our technology, it will be much easier to use multiple financial products around the globe, highly efficient and in an atomic approach, I would say. So that means you make just one transaction, and you bought some stock of Tesla, you bought some ETF, and without taking care where it was done. Yeah. So it would be like more globalized financial system with standardizing on the blockchain, since you don't have to trust with by using the blockchain technology. You can verify everything what's happening on that.
Yeah. So new kind of user interface with a transparency, where you can access to any asset that becomes liquid in a couple of clicks. Very transparent, very smooth.
Liquidity is distributed among multiple exchanges. And also in traditional world, you have like different liquidity existing in different exchanges. And to aggregate this is really a pain. So we are doing this on blockchain because it's possible here on the blockchain. We have decentralized exchanges. Our algorithm can route through multiple market tabs by using multiple liquidity sources in one single transaction. And nowadays we're also offering, I call it decentralized Nasdaq approach, where people just create an order and professional market makers look for the liquidity and execute it for the best trade, because they compete between each other. Yes. And we address it with a smart contract approach, with a decentralized approach.
Well, one of the challenges that the CeFi exchanges have faced ever since the collapse of FTX, even before then, is proof of reserves. Everyone's talking about it for the last year, right? How does the decentralized exchange offer that kind of proof?
So if you look back to the depeg of USDC, what happened like half a year ago, we got $4 billion a day. Yeah, this is really huge. And why? Because Binance started to struggle for withdrawals and deposits of the users.
Yes.
They started to stop the system. Our system, you cannot stop smart contract. It just works on decentralized computer around the globe, and everyone can access it. And this is our huge benefit, that no one can need to deposit money to us. They can just trade from own wallet, right? From own cryptocurrency wallet, without trusting a third-party intermediates. And this is much more efficient than what we see right now. And they understand that people are moving to Web3. People understand that ownership is more important than a brand like Binance, for example.
I agree, and we didn't learn, because I remember in the early days of crypto, we already had like issues of trust with one of the first exchange called Mogox, where user could not withdraw funds and where they lost a ton of money. This was already in 2013 or 2014.
Right.
We didn't learn, and here we are again with another collapse like FTX.
Well, let's just take 1inch, for example. So I use the 1inch wallet, right?
Good.
How do I know that my funds in the 1inch wallet are not being used for, in FTX's case, to provide funds to Alameda Research or an equivalent? Or how do I know that it's not being siphoned for other uses, or to lend it out in the case of Celsius?
Yes, because it's a self-custody wallet technology. It means that your private key is stored highly secured on a smartphone, encrypted with the secure enclave on Apple device, for example. So no one have access. Also, we have no access. We are software developer who are building this application. We have no access to your funds, because your key to the bank, to the blockchain bank account, is stored in your application, and we have no access to it. To prove this, we perform security audits. There are security companies who are generating reports, looking through the code, through how this was built, and ensures that there's no possibility to access the funds of the user.
Yeah. So in our case, sorry David, we have 11 external auditors auditing our smart contract. So that's on the security and on the tech.
We take care a lot about security audits. And here, for example, this is a 1inch hardware wallet. We are gonna release it next year.
That's the hardware. That's the hot wallet.
This is the
cold wallet.
Cold wallet. The hardware wallet. Yeah. So, and it's gonna be highly open sourced and open for developers, so everyone can verify that it's that the random generator is really random, not like with Ledger that is a black box and you don't really know what's happening under the hood. And here you can, as a developer, also contribute and add applications and Web3 applications support here.
If I lose that, is there a backup?
Yes, we're planning to offer NFC cards.
Okay.
So you copy just the device to the NFC, and then you can store it safely with your password and in a safe. And when you need it, you can just import the
I'm interested in learning about trading using your platform. Okay. So a lot of traders watching our show. Let's say you use a CeFi exchange, Binance. What, it doesn't matter. They have a spread. Is that your business model?
So we're on 1inch.io, the official Web3 application, which is used for swaps. We don't charge any fees. So to charge the fees, it takes it's a long process. We have decentralized autonomous organization, 1inch DAO, which needs to decide together with the foundation, which is the real world vehicle, which is a non-profit organization. They need to decide, for example, to charge fees. And it causes also some complications in terms of regulation. So right now we have a zero fee model. We don't plan, also from the community side, we don't plan to change anything in these terms. And you get the best execution in our case, since we agree the whole liquidity on the network where you trade, for example, on Ethereum. And we use our market makers to offer also liquidity from centralized exchanges. So it's like single point of all liquidity. You can just imagine like a Nasdaq, you know. In Nasdaq you have also a lot of market makers who are coming with own liquidity, who are hedging on other exchanges, other like options, for example, as well. And we have just built a kind of decentralized Nasdaq. Yeah?
Okay. Wait, so Walid, if just building on what he said, if there's no fees, how does 1inch Network make money?
So we have other way to be profitable.
Yeah.
Right now we are looking at how we can onboard a maximum of users. Similar to what done Spotify in the beginning. You know, they were here with the new technology and trying to capture as many users as they could.
Right. You have to differentiate between structures in our one-inch network. We have, I already said, we have a non-profit organization, One-Inch Foundation.
Okay.
We have our own DAO, and we have our companies who are working on the different products. This One-Inch hardware wallet is built by independent team. They got a grant from the DAO, $2 million US from the treasury. And we have also One-Inch Labs. We are also Walid this world, I as well. And we are looking also into different topics. For example, we have built a developer portal. It's like software as a service, like AWS service for Web3 people, for Web3 developers and Web3 companies. Just imagine you're a developer and you have an idea, you would like to build a Web3 application on Ethereum. But you know, you need to build a lot of things by yourself because such services are really rare on the market. For example, you need to know which tokens are on the wallet with which balances, because you're doing, I don't know, like analytics platform for analyzing portfolios. You need to build it by yourself, but since our release of Dev Portal, you need just to get the API key and use our web APIs. So it's easy to jump from Web 2 to Web 3 for developers just by using our APIs. This is also a revenue stream for the labs for us. So just imagine like MetaMask, Trust Wallet and other are using our APIs already. Yes. So we can earn there. And our goal is not to make money right now, like millions of US dollars. Of course, we try to become sustainable, but we are good. You know, we raised a lot of money from professional investors, and we are growing this space. We are growing Web3 space, improving the usability, so we can onboard more people. And it's not about making money right now.
Do all decentralized exchanges have the same model, which is no fee model?
This is not this is not the case, unfortunately. But I understand why this is not the case. In terms of like our competitors, 0x, for example.
Yes.
Like competitors 0x started to charge fees on the API level. It's like 15 bips. And we have seen today Uniswap announced fees for swaps in the Uniswap app. And they charge it into the labs. I'm really curious how they plan to charge it into the labs, because you need to actually deal a broker license, because it's became now for profit. Yeah. So there are different models. If you are not doing it for profit, then there's kind of I would say a little bit gray zone, where you can operate as a non-profit organization. But if you start to earn money, then she needs to take care about KYC. I guess the next step would be for Uniswap to introduce KYC as well. And theoretically, it's damaging the space, you know.
I want to learn about arbitrage. There was a time when liquidity was not very high in the crypto space, and so many arbitrage opportunities. Arbitrage, just to explain to the user, is if you have, let's say, Ethereum price on one network or exchange that's different from, let's say, another network or exchange, and then you can buy and sell on different exchanges to profit off basically make a spread for yourself. Does that opportunity still exist today?
Sure. Our algorithm is arbitrage algorithm from the beginning. So before we wrote One-Inch on the hackathon, we were like trying to arbitrage and recognize there's a room for improvement for algorithms. And then we decided to open this algorithm to everyone, so everyone can just use One-Inch to just perform the best execution. This is actually arbitrage under the hood.
Yes.
So there's still people who are arbitraging and making a lot of money, but there are more people who are attacking traders who swap, right? Math. So sandwich attacks, what's happening. So I pitch it to most of my keynotes.
Right.
And our technology, for example, solved this problem. So our decentralized NASDAQ approach, people just create order and professional market makers feel. So there's no room for math and extra front-running attacks.
Well, you and I were talking about the future of traditional finance, how the traditional banks and perhaps other Fortune 500 companies are trying to adopt cryptocurrencies, trying to adopt these kinds of payment methods that we talked about. One-Inch is going to be part of that solution. How?
So I think it's already real. I read last week that Goldman Sachs is launching an ETF. I read that a couple of banks also are now creating like tokenized platform for bond to be on the blockchain. I saw a French bank called BNP as well tokenize the bond to finance like green company. We're already there. I think 5 years from now, fundraising will only happen through the blockchain. Why? Because like Sergej explained, it's secure, it's very user-friendly, it's liquid, and you don't need to trust. That's number one. And you are always in control of your assets. So I think we have a bright future. In front of our eyes, I think we are seeing like a financial revolution like we've seen in the glorious 30s with the industrial revolution. I think 100 years later, we're seeing finally the financial system evolving towards a more user-friendly and easy instrument to use for anyone. And like I say, we are moving into a globalized world, right? Today, people are, look, I am from France, you are from Canada, he's from Germany, and here we are in Dubai, speaking one language.
Final question for both of you. Let's say 100 years from now, we'll all be gone, okay? The average person, what does their bank look like? How do they pay with their money?
I have a little bit the fear that we will be not anymore here on the earth, because if Bitcoin starts to skyrocket and people start to mine, we will destroy our earth. Or another scenario would be we adopt Bitcoin and make it green, and adopt blockchain technology, and everyone would have like hardware wallets, okay. Using for payments, using for a lot of other secrets, and using the blockchain technology.
Why can't I, hold on, just hold that up. Why can't I just go to Starbucks over there and scan this? Hey, so is that coming?
Theoretically, you could get it soon.
Yeah.
So we are working also here to bind credit debit cards on the hardware wallet as well. Yeah. So you don't need to use your phone. I think like if you go out to the stars and, for example, Elon Musk create a colony on Mars, they will exchange values between Earth and Mars and other planets, not by sending diamonds and gold. They would use blockchain technology because they can verify that what was sent from the Earth to Mars, it's right based on the cryptographical approaches.
Walid, what's your vision?
I think I'm gonna just agree on those beautiful words because they're amazing. It was a pleasure to be here, David.
Thank you.
We really enjoyed the discussion.
Appreciate
and you have a new subscriber.
Thank you very much. Well, I hope everybody watches this and click on the links below to learn more about 1inch. We'll put the links to your social media accounts in the description. Thank you very much, Walid.
Thank you very much.
Thank you very much, Sergej. Good luck to your next ventures.
Thank you.
Thank you for watching. Don't forget to like and subscribe.